Okay, so again, a very good afternoon, everyone, and welcome to today's webinar session, which is on Goa's Deposit Refund Scheme. We are going to help you understand what are the expectations that you have, that you can have with this scheme coming in, and what is the impact that it is going to have on the businesses currently operating in Goa, or what is the readiness that you will be requiring for this particular scheme in Goa. ReCirculytics was founded in August 2025 with a very deep focus on EPR consulting and the technology practice for India's evolving regulatory landscape. Now, we provide end-to-end compliance support across all the notified waste streams which are currently operational, which is your plastic packaging, e-waste, battery, tire, and used oil, and the upcoming compliances, which will be ELV, which will be non-FE, and your construction and demolition waste as well. Now, today's update, the EPR ELV portal has gone live. So I am sure everybody is aware of it. So we will be supporting on ELV as well. So now the main mission of the company is to bridge policy, practice, and technology through data-driven solutions so that they strengthen governance, circularity performance, and long-term sustainability outcomes. Now, the company is led by Sujain Jain. He's the founder of ReCirculytics, and he is a first attempt chartered accountant and a very early pioneer in India's EPR compliance ecosystem. He himself has supervised more than 400 plus annual return filings, and he brings a very deep expertise in regulatory reporting, credit management, and digital compliance workflows. So prior to ReCirculytics, he has worked with Fortune 500 companies and global packaging leaders, designing practical compliance and circularity strategies. And he continues to contribute as an EPR expert and industry speaker. Now, we are offering services, like I said, across all the operational EPR regimes and from end to end. So we are offering our services in the fields of compliance, consultancy, credits, and technology as well. Now, when it comes to our tech tools, so we have a few tech tools which makes it easier for you to be compliant with your EPR regime, with EPR compliances, all the data uploads, annual return filing, and everything without any error, and making it much more efficient. So the first tool that we have is GST e-invoice to Excel converter. Now this converts all the GST e-invoices JSON files into structured Excel formats, acting as a pre-validation layer to ensure data accuracy before CPCB portal uploads. The second one is GST e-invoice JSON to PDF converter. So it transforms the GST e-invoice JSON data into secure, shareable PDFs, allowing sensitive fields such as pricing to be made while maintaining compliance transparency. Third would be your smart verification of registration status. This is specific to the plastic portal as of now. The fourth will be Tally ERP TDL integration. Now this captures all the CPCB mandated compliance data directly at the source with the source within the Tally ERP and generates submission ready reports, eliminating manual data handling and reconciliation. Next is your automated CPCB bulk uploads. It's a bot that automates your uploading of invoices onto the portal. And last but not the least is our EPR credit intelligence. So which gives you a weekly consolidated view of EPR credit activity across the CPCB portals. So it tracks generation, trading, and availability across waste streams to support informed compliance planning. Now, moving on, since I have seen like a lot of people have joined in, and we can start with the session. So now I will again welcome all of you to our session, and thank you for joining us. And my name is Arushi, and I will be moderating today's session. I will be helping you navigate this session. And today's webinar agenda, as you can see on the screen, is overview of the Goa Deposit Refund Scheme, compliance and operational requirements, how businesses should prepare before April 2026, key challenges and practical considerations. Now, before we begin the technical discussion, I will set a basic foundation for today's webinar. So the deposit refund scheme is a structured state-level system designed to ensure that packaging introduced into the market is returned, tracked, and recycled, rather than ending up in landfills or the environment. At its core, DRS works on a very simple principle, which is a refundable deposit is attached to certain packaging materials. Now, that deposit flows through the supply chain and is returned to the consumer only when the packaging is brought back into the system. But what makes Goa's DRS different and more complex is that it is digitally tracked through QR codes and unique serial identifiers, which is your USIs, which our speaker will make you aware of in the later slides. Now, the financial structure, which involves deposits, escrow mechanisms, system participation fees, and reverse collection fees, and also the multiple stakeholders that are part of this system. Now, this makes DRS a compliance which will require system readiness exercise from all the businesses who are operating in Goa. Now, today's session is designed to remove ambiguity. And by the end of this webinar, you will walk away with a clear understanding of how Goa's DRS works end to end, visibility on where your responsibility begins and ends, and practical clarity on what needs to be prepared before April 2026. Now, with that context set, let's now move to today's speaker. And it is my pleasure to introduce Sujain Jain, founder of ReCirculytics. Sujain is a chartered accountant by education and one of the early practitioners of India's EPI compliance ecosystem. And he has worked extensively on all the regulatory reporting, credit management, and digital compliance workflows. So today he will be walking us through Goa's deposit refund scheme infrastructure and with a focus on expectations, impacts, and readiness that is required from the businesses operating in Goa. So with this, Sujain, over to you.
Thank you, Arushi. Good afternoon, everyone. First of all, thank you for joining today's webinar. So, without wasting much time, let's dive into the discussion. Firstly, we'll try to understand the legal authority and applicability of the scheme. The scheme was introduced under the Goa Non-Biodegradable Garbage Control Act of 1996. The scheme was introduced on 16th April 2024, 16th August 2024, and in November 2025, there was an amendment issued to the scheme. The scheme is administered by the Goa Coastal and Environmental Management Society, which has appointed a system operator who would be looking after the whole scheme, and the on-ground enforcement would be done by the legal metrology officers. In terms of applicability, the obligations primarily apply to the brand owners and importers who introduce products in the Goa market, which are sold through any channel, be it retail, modern trade, e-commerce, Horeca, etc. Exemption is provided only to micro enterprises, but enterprises who are selling liquor or tobacco in the state of Goa, even though if their classification status is micro, will not be exempted from the scheme. Further, in the rules or in the scheme, the producers are also referenced as an obligated entity, but looking at the current implementation framework, they do not seem to be a primarily obligated entities while they will be supporting the brand owners and importers for fulfilling their obligations. Now, let's have a bird eye view on understanding the whole Goa DRS, and then we take a deep dive into some specific parts. The first step of this Goa DRS would be the manufacturer who would be paying the deposit amount in the escrow account. Based on the amount deposited in the account, the system operator will provide the manufacturer with the QR codes which are to be affixed on the portal. Once the QR codes are affixed on the portal and the manufacturer sells the product to the distributor, the manufacturer will collect this deposit refund amount from that distributor. This amount will be over and above the transaction value of the goods. The distributor will sell the same goods to the retailer with the QR codes and will collect the deposit amounts from the retailer. Now, the retailer who is introducing or selling the goods to the consumer will collect the deposit amount from the consumer and will inform him about the mandate to return the packaging to get the refund of the deposit. the consumer, upon the consumption of the product, will take the DRS product to the collection point wherein he will receive the full refund of the amount. The redeemer or the consumer who gets the refund can be a redeemer. So, for example, it can be the waste collection ecosystem who can also collect the products and send it to the collection points to get the refund of the deposit amount paid. Once the collection amount, the waste or the material is collected, the system operator, the manufacturer will pay the system operator the reverse collection fees based on the weight of the packaging or the DRS packaging collected by the collection point. Now the collection point, now the system operator will consolidate the material and take it to its central processing unit wherein it will count, validate, sort and send the waste to the recycler or the processor. The recycler or the processor, upon generation of EPR credits, shall send or share the EPR credits to the manufacturer for the waste collected by the system operator through the collection points. Now, let's understand what products are covered. In the first phase, that is starting from April 2026, the items or the packagings which are covered are as following. First is the glass packaging, which can be either alcoholic or non-alcoholic product. There is rigid packaging. There are flexible packaging, which has MRP greater than or equal to 5 rupees. Then there are liquid cartons like Tetra Pak and laminated boards. Lastly, there is MLP packaging, which will be in the first phase for having MRPs more than or equal to 20 rupees. In the second phase of the of the scheme, that is 6 months after the implementation of the first phase, metal cans for aluminium and steel made for beverages will be obligated along with the MLPs, which are priced below 20 rupees. There are certain exemptions, that is the hotel or the restaurant packaging, takeaway packaging, wherein there is no brand. It's just a black color box or a transparent container wherein food is, sold to customers like us. So those packagings are exempted. Flexible milk pouches will be exempted from the scheme. Products having MRP less than 5 rupees will also be exempted from the scheme. And additionally, packs having 10 or less container capacity, that is ml or grams of volume, will also be exempted from this whole scheme. Now, let's come to the deposit amounts which each of the stakeholder in the value chain has to pay, and eventually the customer has to deposit the packaging and collect this amount from the collection points. For glass which has alcohol content or in which the alcoholic beverages are sold, it would be 10 rupees per unit. Kindly note, this is per consumer unit. So let's say if I am selling 100 bottles or I am selling 100 packs, so each pack will have to have a deposit of 10 rupees. Then there is glass in which the non-alcoholic content is sold. For that, the deposit amount is 5 rupees. Metal cans including aluminum. For that also the deposit amount is 5 rupees. Rigid plastic, flexible plastic, low liquid paperboard cartons and MRP having MRP more than 5 rupees but less than 20 rupees, the deposit amount would be 2 rupees. And if the MRP is more than 20 rupees, then the deposit amount should be 5 rupees. So this deposit amount is refundable and they are separate from the MRP. So they are over and above the MRP and they are subject to revision by the scheme administrator. Now that we have understood what the deposit amount is, there are certain fees which the manufacturers need to pay. Manufacturers, as in the brand owners or the importers who are selling products under the Goan market. First is the annual scheme participation fees. This fees is based on the all India turnover, which is starting from 10,000 rupees to 1 lakh rupees. This is along with it, and the GST amount would be additional. This is sort of registration fees and it is non-refundable. Then second is the reverse collection fees. Reverse collection fees will only be charged when the material is collected and is adjustable against the EPR obligations. So for glass, rigid flexible plastics, metal cans and liquid carton boards, the amount is set as 10 rupees per ton, and for MLP the amount is set as 12 rupees per ton. Kindly note, currently since only the EPR plastic packaging scheme is activated, the credits for the plastic packaging will be, provided to the manufacturers, and the scheme is aligned with the plastic waste management rules. But since we all know that there are other packaging EPR also coming into place, I feel at that time there would be some sort of clarity on those credits also. So now that we have understood what are the fees and the deposits amount and a bird's eye view of the whole scheme, let's understand the registration process which has been developed on the portal. So this is the Goa DRS portal, that is Goa www.goadrs.com. There, if you see, there is a button for manufacturer registration on the top right corner. So the first part of the form is filling the company details, wherein the businesses have to provide the basic KYC details along with the turnover. The businesses will also have to provide their CPCB EPR plastic wallet numbers. So that is basically asked to transfer the credits to your wallet. Then you have to provide the SKU details of the products which you are going to introduce into the Goan market. So there are basically, if you see the brand name, the product or the SKU name, if there is any SKU code, the barcode or the GTIN or the UPC number, the MRP of the product, the content type, whether it is liquor or non-liquor, the container capacity of the packaging or the product, the shelf life of the product, basically what is the material of the container, basically if it is metal, aluminium or other or glass, or it is rigid HDP or others, and the weight of the container. So basically all of these details which are captured here are to understand the deposit amount, the reverse collection fees, and ideally if they are asking for the weight of the empty container weight, then it would be for the transfer of the EPR credits. Kindly note, the submission of the SKU details at the time of registration is optional, but can be done later, but it is to be done before the introduction of the product into the state of Goa. Next slide, please. Third detail which the application form is asking is the details of the facility um, which you are operating. So the facilities have been classified under three categories. First is the printing facility, second the packaging facility, and third is the warehouse. So if you see in the forms in on the left hand side in printing facility, they ask you to name the facility. They ask the name of the SPOC, and they also ask the facility email name. For new packaging facility also, there is the same thing that the register address, the name, and the SPOC name and the email is asked. But for the warehouse, there is no email ID asked. So it could be a case wherein the printing facilities and the packaging facilities will also have to log in to get the QR codes, and since they will be involved in the process of a fixation or printing of these QR codes. Again, this the submission of these details are optional at the time of registration, but can be done before the but has to be done before the introduction of the product in the state of Goa. Lastly, there is a power of attorney or the board resolution or authority letter which has to be submitted, and then there would be the payment of the annual scheme system participation fees. Now that we have understood the registration process, let's understand the QR code. So every packaging or product, DRS product which is sold in the government market should carry a QR code with unique serial identifier to ensure that there is accurate scanning and traceability of the whole packaging. The manufacturers have two options. First is direct QR printing or direct printing on the label on the container, which is used to give the customer. The second is by a fixation of sticker through authorized sources. The standard size of the QR code would be 10 by 10 mm with a white space of 15 by 15 mm, which would be which would be reserved within the label for artwork to and to maintain proper contrast and scannability. So if you see in the picture, the QR code is of the size 10 by 10 mm, and the whole overall USI or the sticker is the size is 15 by 15 mm. Now, each QR code should have the following components. Firstly, it should have a Goa DRS logo. It should have the deposit value. Again, the 15 by 15 white space and 10 by 10 QR code space. Then there should be a human readable QR string. So in case if the QR code is not scannable, the collection centers or the system operator may use this human readable string to understand the product. And then there should be a call out saying that return and get a refund. In terms of placement, the QR code should be placed adjacent to the MRP batch expiry or the barcode. It should be easily visible and to scan. Uh, it should not be there. You should avoid creases and damage prone to stick it in the damage prone area, and it should remain undamaged when the pack is opened or used. So, for example, in a sachet, you should not place it maybe on the top corners from where usually the sachets are torn. So it should be placed adjacent to the MRP or batch or the variable printing which we call next to that code. Now, if you are if you are opting for a sticker affixation process, there is a process wherein the manufacturer will have to order the QR sticker from the management page. He will have to provide the SKU details, the quantity, and the delivery address. And he will have to make two payments. First is, as we discussed earlier, the refundable deposit amount and some sticker cost and logistics cost. The turnaround time for getting this whole sticker within the facility would be within 7 to 10 working days. A minimum order quantity of 220,000, but it's mentioned on the portal that they will also provide smaller quantities but at a higher cost. In terms of sticker life cycle management, if let's say if I have a facility wherein I am affixing the stickers and the stickers do not pass the QC checks or the product is deactivated, we need the manufacturers or whoever is the responsible person in the facility needs to scan this portal through the deactivation app and record the reason why this QR codes have to be deactivated. Once they are deactivated, the refund will be given back to the manufacturer in their account. All the stickers must be applied or deactivated by the cycle end. Deactivated stickers will permanently removed and cannot be redeemed. Lastly, let's understand the penalties which have been notified for non-compliances. So first, non-compliance is there is no USI or the missing deposit. In that case, there would be a fine of 20 to 25,000, and it can also lead to batch confiscation. So the trigger for this would be dispatch without a QR code or the USI. Escrow non-compliance would be for 25,000 rupees again if the deposit is not funded into the escrow. USI tampering or forgery, again 25,000 rupees. Again, there could be the confiscation of the batch, and there would be other violation like non-registration or RCF or the annual system participation fees is not paid. There could be seizures at factory, warehouses, or transmit, or there could be a permanent suspension from the DRS operations. The enforcement authority, it is the legal metrology officers above the rank of inspector. They will have the power to inspect, seize, and prosecute. Penalties are cumulative with other actions.
Thank you so much, Sujan, for covering all the details of the Goa DRS in such detail and making us understand the basic infrastructure that is going to be there, which is going to be operational in Goa from April. Now, we have covered the basic infrastructure, basic details that will be required, and the basic preparedness that will be required by the businesses operating in Goa as of now. I would like to summarize a few key takeaways that Sujan has already covered and that everyone should have will leave this session with based on today's discussion. So now the first point that I want to highlight is that Goa's DRS is a system that combines deposits, digital traceability, financial flows, and recycling outcomes into one integrated framework. and all the stakeholders that that are going to be there in Goa and operating in Goa will have some specific responsibilities, and any gaps at any point can disrupt the entire compliance mechanism because it is interrelated and all the stakeholders have some responsibilities which is connected to the other because the deposit is being passed on along the supply chain. Now, the QR codes and USIs, which is your unique serial identifier, they are the central part of this particular compliance because they are not just labels, they enable the deposit refunds, material tracking, EPR credit transfer, and enforcement validation. Financial planning for the businesses is going to be very important, as operational as readiness as well, because businesses will have to plan for the deposits, the ASPF, the RCF, and understand how these interact with their EPR obligations. So with this, we have covered all the basic things that will be there. And now, since you have noted down that the www.goadrs.com website is where you can find all the details, all the related documents, and this is a developing scheme. Now we will have to see how the businesses operating in the state of Goa are going to deal with the system and how they are going to respond to the compliance, because it is quite a complex system, a structure, because it needs a lot of changing in the existing supply chain and existing selling processes in the state of Goa. Now, the state of Goa is not alone here. Himachal Pradesh is also preparing for a similar deposit refund scheme, and the laws regulations are already out. They have their system operator, their scheme administrator is ready. System operator has not been yet chosen, so it is the process that is still going on. But yes, Himachal Pradesh is soon following up in the steps of Goa, and we think that many more states will come and will obviously join in Goa and Himachal Pradesh. And other thing is that why Goa and Himachal are doing this, to begin with, is these are very tourism centric places and there is a lot of littering. The littering is a very major problem that is happening there. So it is a small intention or effort maybe from the government of Goa and Himachal Pradesh to deal with that littering, which is why they have come up with their own system. So we will keep an eye on this particular system for you and keep on updating you on the same. So you can join us in our WhatsApp community, wherein we keep sharing the latest updates about EPR and about Goa DS also. Also, anything that is related to EPR, we will be sharing every detail there. And if you want to connect with us, you want to discuss anything about Goa DRS, or you want to discuss anything about any of the EPR compliances on all the operational schemes in India, you can reach out to us on the details mentioned on the screen. We'll be wrapping up the session now, since we have covered all the details, we have addressed all the queries. But if there are any queries or doubts that are left unresolved, please feel free to reach out to us. There are numbers and emails mentioned on the screen. You can join the WhatsApp community as well, and you can directly connect with our team to get your queries resolved. So now this is not just about Goa DRS, but all the EPR systems that are currently operational in India and are upcoming. We are supporting you there with your compliance, with your credits, annual return filing, any kind of challenges that you might be facing with the implementing authority, or any kind of knowledge support you need on the EPR. We will be happy to help you out there. So now with this, I would like to close the session and thank you, Sujan, for guiding us through this system. And thank you to all the audiences who have joined in, taken in their time on the weekend. It's Friday, obviously. So I would like to thank you all. And we will bring more such informative webinars and other sessions for you in the upcoming days. So thank you for your time and have a great rest of the day. And we will now be ending the session. Thank you so much.